All right. I think we'll go ahead and get ready to get started here. So again, officially welcome to the Paycheck Protection Program Income Tax Consequences webinar today. This is probably our sixth webinar on the PPP and EIDL and all the kind of disaster benefits that the government put together in the Small Business Administration. And, you know, we've been monitoring the situation closely and just wanted to bring you up to where things are currently here today. But before we get into the actual content, which is going to be about 10 minutes from me and then maybe 10 minutes of Pat sharing some examples and then live Q&A, let's turn it over to Austin so that you can understand how to do the Q&A. Just a quick refresher. Austin?
Right on. Thanks, Dave. Welcome everybody to our fifth webinar in our PPP webinar series. My name is Austin Shear. I'll be your MC during the Q&A session, which will take place after Pat and Dave go about and give their content. So there's a little Q&A section at the bottom of your screen. You'll see a little, the little bar. Click on the Q&A and you can type any questions that you have into there, and I'll answer them in the order that they come in. Now, I am not an accountant or a tax professional, so if it seems complex, I'll bring you in and let you ask the question yourself. If it's an easy question, or if you just prefer for me to read it for you, please put that in the question so that I know, and we can mitigate any awkwardness. But if you have a microphone, keep it enabled for if we bring you in to ask your question. That's all I got until everybody has said their piece. So I'll hand it over to Dave.
Thanks, Austin. Okay, so here we go. Just so you know, for those who have not gotten them, PPP loans are still available. One more week through August 8th. The government did extend that. If your particular lender is not offering them, you can reach out to us and we will share lenders. We've gotten some nice feedback from our clients who have mentioned successful lenders that were pretty easy to work with to get the PPP. So just know about that. Regarding forgiveness, the SBA says that PPP forgiveness applications are on hold until at least August 10th. And that may get extended if there are new legislative amendments to the forgiveness process that necessitate changes to the system. There was a final Treasury guidance regarding PPP forgiveness that was expected in early July, but that did not emerge yet. And now it is, expected to be coming out sometime after final federal legislation issues are resolved. So we've told you in the past about some of those things, and we're going to talk a little bit more about that here today. But before we do, just a quick little recap on PPP. You know, at least 60% of those funds were supposed to be used for payroll. Up to 40% can be used for rent, interest, and utilities. They did extend through the Flexibility Act the covered period for up to 24 weeks instead of 8 weeks, though you can elect 8 weeks if you received your loan prior to June 5th and you expended it all, where you could get 100% forgiveness. They did push the safe harbor rehire period from June 30th to December 31st, and they did extend the loan maturity for up to 5 years if your loan is not 100% forgiven, and that's automatic if you got your loan after June 5th. If you got your loan before June 5th and you're not 100% forgiven, you can request from your lender to extend that loan maturity period to 5 years. Again, if it's not forgiven and you are going to owe payments, payment is deferred until either when the SBA remits the forgiveness amount to the lender or 10 months after the covered period ends. So you would have a while to owe any money there. Now, let's get into the key point that we really brought you here for today, which is income tax consequences. As we've told you in previous webinars, the IRS came out with a ruling, Rule 20-32. That explicitly states that ordinary business expenses, which are normally allowed to be deductible for a business, but if they were paid for using PPP loan proceeds that were forgiven, that those ordinary business expenses are not going to be deductible because the forgiven loan amount is excluded as gross income. So the loan amount that gets forgiven isn't counted as income, because it's forgiven. So that was free money coming in. Well, they're not going to let you also get free money going out of then deducting those expenses. So there is no double tax benefit. And this is what the Treasury and Stephen Mnuchin and IRS This is their current position. This is the current ruling in force. And as CPAs, we are advising you based on that ruling. Now, bear in mind, that position was heavily criticized by key members of Congress, both on the Senate side. You got the Finance Committee Chair, Chuck Grassley, who said, hey, that is contrary to what we actually intended with the Paycheck Protection Program, which was to give businesses money to help them stay afloat during these difficult economic times with COVID. And we weren't trying to punish them of not allowing these ordinary business expenses to be deducted. In addition, on the House of Representatives side, you got the chair of the House Ways and Means Committee, Richard Neal, a Democrat from Massachusetts, also said, we're going to do something about that, and we're going to try to get some legislation to reverse that position. Well, right away, within a week of releasing that notice, a bipartisan group of senators introduced the Small Business Expense Protection Act. And that act absolutely would have confirmed the intended treatment of business expenses forgiven under the CARES Act by saying, no, there will be no deduction that shall be denied or reduced. No tax attribute shall be reduced. No basis increase shall be denied by reason of the exclusion from the gross income. So it would have erased any confusion by saying that all those ordinary regular business expenses paid for with a forgiven PPP loan can still be deducted from small business taxes. Would have, I say, because that Protection Act was referred to the Committee on Finance and no further action's been taken at this time. So it was introduced and it's been sitting around. So we don't have new legislation that changed things, but there may be. There may be further congressional action at some point. There may be a new law coming out. It's possible that the court may get involved to address this, since there's a $500 billion of PPP loans out there. There's a lot of stakeholders here. Or it's possible that some pressure will be applied on Treasury and IRS and that the ruling will change. Those are all possibilities for the future, but we are working within the present. And in the present, the IRS rule is you can't deduct those ordinary business expenses because you got this free PPP money that was forgiven. And so in that case, until things change, at least the good news is that since this has been a difficult year for many businesses where income is down in 2020, this is at least as good a year for any such of a tax filing versus next year when hopefully business and income pick back up. But with that as a backdrop, the key is for you to understand and be prepared for the tax consequences, with which I'm going to turn it over to Pat to go ahead and walk through some of those scenarios.
Thanks, Dave. Yeah, this is going to be a really extraordinary year in that it's the first time in history that every single one of our clients, I believe, that are in business anyway, might have a potentially, big tax issue. And that's just to say that they might owe money that they hadn't anticipated. It's hard for clients to understand. I mean, I think we're going to hear a lot of that doesn't seem fair, or I wish I wouldn't have taken the money. That's not true at all. So I am going to kind of try and explain, and then I'm going to try and explain our real concerns, and then I'm going to take some questions. But like I always do, I'm going to walk through an example to try to make the point. And so here, what I've done is I've created a sample balance sheet and income statement for a hypothetical client. You guys all get these every month or quarter, depending on what your service plan is with us. But so I'm not going to dive into it, the particulars, except the two highlighted things, which are there to make a point. This is the first quarter of this year. The client has $45,250 of income, and they have exactly $45,250 in cash. So in other words, they started with no money. They made $45,250, and it's still in the bank. And that's intentional to try to make the point. So at the end of the first quarter, that's when the shutdown started. Client gets a PPP loan on, say, April 1st. He still has $45,250 in income, and now he has another $125,000 in cash because that's what he borrowed on his PPP loan. I'm showing you this to make it clear that it does not hit his income statement. Not yet. He does have the money, $125,000, and now he has a new liability. It's a loan. He borrowed $125,000. Until it's forgiven, that's what it is. It's just a loan. Okay, so let's look at the next hypothetical 3 months. So this particular client really was hit by COVID. As you can see, he had kind of a tough second quarter, but he did continue to pay all of his payroll expenses because he wanted to make sure he got that loan forgiveness. But the reality is he lost about $85,000 in the second quarter. So now his profit has turned to a loss when we're looking at the income statement. That's okay, but let's look at the balance sheet for a minute. He had the money. The reason he was able to incur that loss was because they gave him the $125,000, and he still owes the money. And so we're showing a $39,500 loss for the year because I still owe $125,000. It's an important point. So here's the balance sheet. Here's the income statement. We're going to get forgiveness. And I've titled this tab March 27th because this was our understanding on March 27th. They were going to forgive the debt because he meets the qualifications. And right away, I want to say that is income. You know, so there's nothing unfair about saying that that is income. They gave you money and then they didn't make you pay it back. So it really truly is income. If this was your books, if this was your income statement, regardless of the tax treatment, we would be showing an $85,500 profit because of the $125,000 in debt forgiveness. Debt forgiveness is income. But what they did, and I was delighted by this, I was really, really excited. They said, well, we're going to exclude that debt purpose for tax purposes, that debt forgiveness. And so we're going to let you deduct a $39,500 loss in this hypothetical, even though we gave you the $125,000. That's the way it was written. And if you listen to, you know, our elected representatives, that was their intention. We're going to give you the money and we're going to let you keep your write-offs. Okay. So again, I'll pull up the balance sheet. Now we don't owe the money anymore, but we have $85,500 in cash. So you can see it's still tracking to our bottom line, $85,500 in bottom line, $85,500 in cash, but taxable income, a $39,500 loss. Just beautiful. Here's your cake. You can eat it too. Then sometime in April, the IRS spoke up and said, no. We'll exclude it from income because they said it's excluded from income, but we're not going to let you deduct the expenses. In other words, it's just another way of saying it's taxable. Whether they call it taxable exclusion income or they don't allow you to deduct the expenses, either way it's taxable. And so we're back to a bottom line of $85,500, which again ties right out to the cash that we have in the bank, $85,500. And if it ended right here, I wouldn't be that concerned. I mean, it's a bummer to have to pay the tax on the $125,000, but we've got $85,000 in the bank and we have to pay tax on $85,000. And it's an $85,000 cash increase. You know, we started the year with nothing. So it truly is income. If this were the end of the year, I wouldn't be that concerned because at least I would know you would have the money. My fear and our fear is that a lot of you won't have the money. Well, how could that be possible? You know, you could lose it in business and then you wouldn't have the income, but there's other ways that clients are going to have the opportunity to create phantom income. And that's how you could really get yourself in trouble when you get this kind of loan. You could use it, for example, to pay debt. And in my hypothetical, you could see I've got this client has $85,500 in debt. And I made it that way just to illustrate a point. And so let's say that this particular client thinks, well, this is my opportunity. I've got all of this debt. I've got $85,500 in cash. I'm going to pay off all of my debt. What would that look like? Well, all your money is gone, but all your debt is gone. Now, it would never be that clean in reality. I understand that. But again, I'm trying to make a point. What's the income statement look like now? And that really is the point. I'm having a little problem with my clicker here. Let's, oh boy. Let me, unhide. Okay, here's my income statement. So the point is, I still have $85,500 in income. And that's still fully taxable. That's the way it's written now. So this guy, you could see he has no money in the bank, yet he has $85,500 in taxable income. He's going to owe the tax on that. If you figure a third, just to ballpark it, you know, you're at around $25,000 in tax he owes, even though he's gotten rid of all the money. And it could be really bad. I mean, we had clients get over $400,000 in some cases. If you thought, well, you know what I'll do is I'll pay off the mortgage. Maybe the year wasn't that bad after all. And I've got this $400,000 and I'll pay off this mortgage with it. Now all the money is gone, but you owe the tax on $400,000. And you know, all the way along the scale of what you got, it could create problems. And it is a pretty significant tax issue. Again, we're going to hope for the best. We hope that they go back to the old way, in which case most of us aren't going to have a problem, because we're going to have that tax-free cash infusion and we're going to have spent it on tax deductible expenses. But the way it's written now, that's not the case. We are going to look at everybody's tax situation. We always do. It's just this year, again, so many of you are going to have a potential tax problem that practically all of you are going to hear from us. So you probably will get an email. I have a sample email of what we're going to send out. And I'll just read it to you because it's very brief. Client, I reviewed the financial statement for your company, and all else being equal for the rest of the year, I would project income of $50,000. Now that projection is something that you need to help us with, because we're assuming that the next 6 months are going to look like the last 6 months of last year. So we're always guessing. That said, we do that all the time. We're constantly guessing at where your income is going to land so that we can get in front of it if we think you're going to have a tax issue. We can warn you. Okay, so I'll go on. Presently, the IRS has indicated that the PPP loan forgiveness will be taxable. Your company received a PPP loan of $150,000. Adding that to the projected taxable income brings us to taxable income of $200,000. Last year, the company's pass-through income was $100,000. All else being equal, and assuming a marginal tax rate of 29%, the possible tax increase will be $29,000. Now, the variables will change for each of you, but we do want to get in front of you and let you know the possible consequences of the forgiveness. Again, it's sort of fair. I was surprised that they were going to let us have it tax-free to begin with. It's very disappointing because they did say that it was going to be tax-free, but it is what it is, and we just want you to be warned. We don't know what the final rules are going to be, but we know what they are right now. You should hear from us within the next, say, 4 to 8 weeks. There's a lot of you that we have to go through, but we are going to get in front of it and let you guys know where we think you're going to land. And you really should schedule a 15 to 30-minute Zoom to go over it with one of us before the third estimate is due in September. Okay, with that, I'm going to give it back to Dave, and we're going to handle your questions. Dave, you want to jump back in?
Yep, absolutely right. And we'll invite Austin in, and Kellen can come in as well for any questions that might emerge. Awesome.
Yeah, we got one question that just came in from Carl Larson. I'll bring him in to ask his question, Carl. You should just have to unmute and you're able to talk with us.
Hi there, guys.
Hey, Carl, how's it going?
How's it going?
So I'm a sole proprietor. It's just me. It seems like to keep things simple, I should just account for payroll 100% with that loan rather than futzing around with expenses and are they eligible and everything else, since I've got more than enough payroll to account for in that time period.
Yeah, sole proprietor's got a really nice deal, especially with the 24 weeks. If you just borrowed based on your net income, and I know that you did, you borrowed based on your net income, you're going to get full forgiveness. It's just a question of whether or not it's going to be taxable. It's super easy for sole proprietors. We'll help you with the paperwork when they're actually accepting it.
Right. And then the taxable would happen, if it did happen, it would happen this year, right? So just assume on a marginal rate times that loan this year.
Well, that is an interesting, yes, that is an interesting assumption. I mean, I have thought about this. I mean, there could be timing things. So now if I get forgiven next year instead of this year, is it taxable next year? Or would I have to, maybe amend my return? We don't know that yet. We are waiting to hear. But I would assume, yes, it would be taxable. That would be my assumption, but it's pretty dangerous to make assumptions. I've seen them do crazy, crazy things in the past. So we'll see.
Thanks.
Yep.
Awesome. Thanks for your question, Carl.
Yep.
Another question that I had privately messaged to me by one of our staff was, could future legislation have an impact on when you take forgiveness? Is there a possibility that that could be a mistake for a client?
It's really an excellent question. I don't think so. I mean, it would seem really, really ugly to say, well, if you've already got your forgiveness, you got to pay tax on it. But those who haven't got forgiveness yet, they don't have to pay tax on it. I would hope that they wouldn't do that. But I can't say that they wouldn't do that. I mean, there was a thing where we had an exclusion. There was this loan when that whole housing crisis thing came out, and people got loans to buy homes. And they did exactly the thing that I think she's alluding to. Well, if you got your loan before such and such a date, you still have to pay it back. It was really just an interest-free loan that you had to pay back, but or you have to wait a certain amount of time, or otherwise it's taxable. You paid it back through a tax credit. It was like a reverse tax credit. But if you got your loan after this date, if you got your money after this date, it's still taxable. We're still going to take the money back out of your taxes. So I've seen them do it. I would hope they wouldn't do that, but I can't say, I can't say for certain that you wouldn't be impacted by some future legislation.
So are we recommending people to take forgiveness now, or when should they be taking forgiveness?
Some people are hot to take their forgiveness now. I don't see any problem with that. I don't anticipate a problem with that. But her question, I think, points to the possibility that, well, had you only waited to take your forgiveness later, maybe they've got better legislation and I don't have to pay the tax. So if you wanted to be perfectly safe and kind of hedge against that, assuming you're still going to meet the qualifications for full forgiveness, 24 weeks versus 8 weeks, I guess the safest play is to wait the 24 weeks. You might have been pumping up your expenses though to make it in that 8 weeks, and maybe payroll's fallen down. And so you could be creating a forgiveness issue by waiting. It's going to be a case by case. In general, I think people that qualify for the forgiveness are going to want to maybe get it out of the way. I sense that just from talking to clients. But that's not to say that future legislation won't make that look foolish. And so there is some safety in holding off to wait and see what they're going to do. I hope that they resolve this. I really do. I think that they want to, but a lot of politics going on, so it's hard for them, even when they agree, to get anything done. And this is something that I think that they do agree on. Mm-hmm. We'll see.
Yeah, no, exactly. With so much going on. And of course, now we're in an election year, so we'll see how much legislating is going to get done, between now and then. And we're just, subject to the fancies of our elected officials here. But, apply any pressure, reach out to your elected officials as applicable to say, hey, could you guys get this thing resolved? That's certainly something that you can do as a taxpayer, is reach out to your elected officials. Any other questions?
I don't see any questions coming in. I don't know if we want to give, maybe people are slow typers.
Well, we'll move it to the end, and which is really just to say, here's the action steps, which is for us. And again, if you have questions, bring them in here. We will be reviewing your financials, as Pat said, and we will include those PPP loans in those amounts under the current rule that basically you're going to have to pay taxes on those amounts. And we will meet with you regarding your specific circumstances. In those meetings, or even prior to, please bring up any questions, issues, or concerns with your account manager and or tax manager. And certainly when we're talking, confirm or challenge our tax planning assumptions. Indeed, will the last 6 months of this year be like the last 6 months of next year? Are they going to be way better? Are they going to be way worse? Give us that information so that we can update things more appropriately and have a more realistic picture of the tax implications for you. And then by all means, follow us on social media, and then stay connected via our website and our coronavirus updates page, which has FAQs and videos and resources and the applications and so forth. And for those of you who are not current clients, we're happy to start a relationship with you. There's a get started link on our webpage, and we would invite you to do that. So that's all we have for content. Kellen, Pat, Austin, any other comments or questions?
I've got one last thing. We are recording this webinar, and shortly afterwards, I'll be uploading it to our YouTube page and also sending out a link to everybody who's registered So feel free to share that. I'll also be sending out a PDF of the slides that we used today. So if you want to go into any of those IRS guidelines, put yourself to sleep tonight, you can go ahead and do that. Click on those links. That's all I've got. Look forward to this information being sent out to you shortly.
Enjoy the last day of July and your upcoming August. Let us know how we can continue to serve and add value for you. And we wish you a great rest of your Friday, guys.
You'll hear from us soon.